work, but they don't go down as much as you think they're going to go down. Okay, so as you can see here on our 4 hour, we have a plethora. 1, 2, 3, 4, 5 bearish divergence. Okay. You can shovel your bear. Yeah, exactly. It's bear divs don't care in an uptrend, especially one as aggressive as this. Okay. Even our 12 hour, we got a bearish divergence, and it still hasn't printed yet, but it's there. Now, we did talk about this last week and how we said that sideways is better than up. However, we did have our best weekly candle close we've had ever on Bitcoin. Ever. Forever. So looking at our weekly, it's always important to review the top down. And you can see that our weekly candle close here is absolutely gorgeous, okay? Now we have pushed back since sweeping down below, and now it looks like we're consolidating sideways, preparing for either a push up or a sideways week, which in my opinion is fine either way, okay? Because you can see that we have a week up, a week sideways, a week up, a week sideways, a week up, a week sideways. And guess what? Fool me once, fool me twice, but can we push up? Okay. Now my concern is that if we push up too aggressively, which we are doing, then we could have an SFP and a bearish divergence on a weekly. That is nasty bad. That's nasty. And that could lead to us retracing, not dumping, but retracing at least back down to the lows of the previous range. And that's around 90,000. That would be our range if we're looking at this in general, okay? You can see where the lows of that range is. If you want me to be more specific, we can pull this fixed range volume profile tool back to the range, which would be this one here. And you can see that would be the area there. So right now, a beautiful pushback. This thing has only gone up today. It's kind of very weird. And when things go only one direction, you typically look for it to go back just as fast in the opposite direction. So a little bit of concern right now with the price action. However, we do have continuation here and a lot of room to the upside on our RSI pushing up here. Okay, we're not even slightly overextended on our weekly. As we flip through our catalog, we can see that we did have our bearish divergence coming up from here to here. Now we are doing another one from here to here. However, we are just coming to the top of a range, okay? What this, in my opinion, is doing, it's sort of like a breakout retest, except it's retested the bottom of the range, which is kind of weird. But this weekend was absolutely insane. Pump, dump, right? So a wild, wild weekend. Yeah, pump and dump. Looking at our 12 hour here, we are starting to get that, that it's trying to push up here. Bearish divergence threatening. And guess what? It did that multiple times and it kept going up anyways. So patience will prevail, right? We want to buy the lows of the range and we want to sell the tops of the range. So we have some key areas. We are coming to our value area high right now, the top of our range as we proceed. I'm looking a little bit higher. There's a nice little retracement level in here if we go from swing high to swing low. Okay, golden pockets right in here at 105, 150, okay? So be prepared for that. However, Bitcoin's going up only right now. Did OC disappear? He looks invisible. I think he did disappear. That's okay. Hopefully his thing fixes itself.
No, I just was just went really quick for a glass of water. Of wine, I was to say.
Vino, he's drinking the vino already, Madonna. Right? So this has been up only this morning, and to me this morning, it's a very in my opinion, shitty low. I wanted to see this come below the low here and then bounce, but it didn't do it. Okay, so doesn't do what you always want. However, a nice pushback here nonetheless. Okay, so a good pushback for Bitcoin. We managed to long here on the weekend, and then up, down, insanity, man. Now we're going back up. Okay, so be prepared for a lot of volatility. The NASDAQ, big push up today, okay? After that U.S. debt thing that happened on Friday, the price pushed down. Okay, we had they lost they're not as credible as they used to be. Okay, and then guess what? The market doesn't give two shits. It just pushed it up again. Okay, and we were expecting a similar thing for the S&P. So if we go over to our S&P, I was looking for a retest of previous lows. I actually called this right to the tits. So we came. I literally drew this box and I said, we're coming here this morning. That's what I drew. I was like, right here. And the market opened, we started here and we've pushed up. So, but the market somewhat retraced or crashed because of that news on Friday. Okay, so market has since recovered. It doesn't give two shits. Looking to hold now at 56 or 5,900 here, 59.27, one of my key levels. So a little bit of a scare here on the NAS going into the weekend, right? Because, you know, Friday, this is what it looked like on Friday right here, right? And then obviously futures starts trading on Sunday. Futures continue to retrace down, and then open up this morning with a absolute cannon to the upside, okay? So going back to Bitcoin, you would think that we had a CME gap up here, and we did. It was right here, and it has since been filled. Okay, so that's something else you should be aware of. If we zoom in here, we can see that we had our CME gap right here, and that got filled overnight. Okay, double bottom, push up. We'll see where we get to now. For me, I like that we're range bound. That's going to be the best news yet. The more we can chop sideways here, I would expect one more sweep. So I will share my charts with you guys so you have my key levels. But I will expect one more sweep if we are to push up, okay? Here's those levels. So for me, top of the range, looking for shorts. Bottom of the range, looking for longs. We do have a very nice trend line. Maybe OC will touch on this, but if we look at our trend line here coming up from the bottom, we have come back to it, okay? So from the lows all the way up here, we are holding. Okay, so this is looking good. And then from the lows this morning, all the way up here, we are holding. Pretty nice. So it shows strengths, right? It shows that what this shows me is that the bulls are still in control. If we start to lose these lows, I'm looking at 97,000. If we hold here, I'm looking for all-time highs. Eventually, okay? Eventually. Now, you may want to take these down as well, okay? Why do you want to take down? These are my support and resistance levels. Why might you want to take them down? Well, because I gave you guys these levels last week. You can see all the numbers on the right-hand side over here. But it literally caught the top, okay? Like, I don't know how to get any more specific, okay? But we did well, okay? I'm sorry, the high is 134, and mine is 133.3. I'm off by 0.7. That's pretty good. 0.7. But yeah, the support and resistance work really well. Okay, just as take profits, key levels, all that stuff. And we did have a nice order block up here that we were looking for as well. So we'll see what we get coming into this area here. 105 is kind of where I'm looking for a little bit of turbulence here for this push up, and we'll see if we get it. What are you looking at, Mr. OC guy?
Ooh, I'm looking at a bunch of stuff. Let me get started because this is going to be a deep dive. Let's get started first with Bitcoin because I do have the bullish divergence that we're talking about. Drawing here, we'll also have it on the 15 minutes as a hidden bullish divergence. I do see a balloon long neck dog.
It's long neck, man. That's a poodle. Oh, yeah. or maybe a sausage dog. You know the wiener dog?
Wiener dog, absolutely. A little too stretched from the head. That's what she said. All right. Let's not record that part. Too late. All right. So let me get started here. So let's go here. And we'll see. All right, so let's get started with Bitcoin really quickly. Let me see whenever it's all right. Perfect. This is what I'm seeing at the 15 minutes. We already have a hidden bullish divergence. All right. This is kind of like a double bottom. It's not kind of like it is a double bottom. All right. Let me just pull it as it was. We were very high on consolidation. We were 8 to 8 on consolidations on the 15 minutes. What's going on? We closed the previous candles and we open a new one. Therefore, confirming that we're not longer into a high consolidation. We have broken that consolidation and we are trending. I wanted to see that big body candle breakthrough. So we are now changing out of color. So we have the chance when we reverse, look at that. We either create a goose head here, all right, and have a further move before a drop back down or immediate flip of the ribbon to the downside. How are we going to be defining that? With support and resistances. So I believe that we're going to have the goose head further up and drop back down because we have almost an immediate resistance at the top. All right, that is what I'm looking so far. I want to bring up my there we go, order blocks, and I do see an order block above me. It is 50-50, almost is going to be canceling each other, right? Basically, it's just going to act as a little resistance. But what is important right now about the order block is that the order block, it's magnetic. And we don't have a magnetic action right now at the bottom, which means magnetic force to the order block. Then basically bullish and bears, they cancel each other when we do a little bit of a range. And then either a sweep of the lows and continuation and create a new trend line like this. All right, or we flag out and continue to the upside. That remains to be seen. This is on the 15 minutes. Let's go and make a huge jump to the 4 hours. All right, so let me just go back in here. Let me turn basically everything off. Let's get started without anything. All right, so just by looking at this, we are in the same old range. We had a huge volatility week in here. Well, not huge, a big volatility week. Not even that week. I mean, not even that big in the 4 hours, right? And what happens is just basically everything that we gain, we drop, basically taking back control from the bears, going back down, area of support because we have a liquidity zone in here. Look at that, same liquidity week, liquidity week, liquidity week, liquidity week, all right? So we're going to be bouncing in between the same areas that we already know: liquidity week, liquidity week, liquidity zone, liquidity week. So back and forth, back and forth. Now, just taking advantage that I just drew something, we were expecting these areas right here. In fact, if you remember, this is what we left out with this arrow right down here and with this arrow up in here. Why? Because we didn't only had a liquidity zone in here, we also had this trend line in here. So we went all the way to that trend line. Just so you know, that trend line, we drew it in here and we kept pushing it through here. All right. So what's going on? We're still going back and forth on our oscillator. But if I zoom out and make it a little bit higher or bigger, we'll see that we're creating higher lows. All right. So what does that mean? That means that we can create a trend line, and we also are making higher highs. Usually, these kind of patterns end up having a liquidity sweep to the downside. For example, in here, right, we have low, higher low, higher low, higher low, higher low, and then liquidity sweep to the downside on the oscillator. How would that look like in a price action? That depends when your support is at, because this liquidity sweep is gonna be all the way to your big support. In this case, my big support was dynamic reactor. Where is my dynamic reactor now? It's all the way down here to the median. Not only where my dynamic reactor is going on, but also if I zoom out, you'll see that we have a huge megaphone. Again, not a new pattern. We've been tracking on this megaphone, and right now the dynamic reactor, the median on the megaphone, in this trend line here that we drew Friday, that we adjusted on Friday, they all are kind of in the same zone. Important here on this trend line. This trend line could be, and I'm talking about this trend line, all right? This trend line could be an early signal for support, which I believe that we're going to be doing this, and then going up. All right, so the dynamic reactor is going to go higher, basically filling the gap between the median and the trend line. So this is what I do expect, especially since we're finding support at the zero line and on our trend line on the oscillator. All right, I would say that at this point your entry was in here, as it was in here, as it was in here, as it was in here. What is your exit at the same point? Let's go for a square so we can look at it much better. As it was in here, 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 well then it is going to be basically already for TP1. And if you want to be a little bit more specific, all the way TP2 to your trend line, and that is going to be it. All right, so basically already playing out as we were expecting. What's going on in the macro market? So are we going up or down? Well, at this point, I think that we are going to keep ranging and having volatility. The fake movement comes first, and then the actual movement comes in, as Alex would say. And this is because, and let's take a look at what is the CME gap. All right, sorry, come on, where are you, man? I think economic calendar. Sorry, we have for this week couple of things to look at. In between those, we have the 30-year mortgage rate. We also have the 20-year bond auction. We also have initial jobless claims. And we have existing home sales. All right. This is something that Piper prepared for you guys in his show. Let me copy and paste it here because this is gonna prepare you for the numbers that are gonna be released. All right. Let's go and first fill in the blanks here very quickly. Initial jobless claims. Data may sway Fed policy expectations, impact Bitcoin as traders gauge signals of economic strength or weakness. PMI, but services and manufacturers signal economic momentum below forecast number could trigger Bitcoin rally below forecast numbers. All right. And then April, existing homes sales. By the way, everything in here, I would say save it and just apply the exact same text and just change April for May, or May to July, or December or October, or whatever month we are on. All right. So existing home sales, cloud, and this is the keyword: existing home sales. All right. So existing homes, no new builds. Home sales. All right. Exclude cool the firm. Sorry. Economic slowdown. Fears pushing investors to towards crypto as hedge against instability. This is the only point that I do have a strong opinion about, which is, all right, what if I'm doing great, but I don't want to move out of my house, right? I'm already happy with it. And that depends on the culture, right? I would say maybe and this is my personal opinion, the way that I look at it from outside, as an outsider that has lived in the States and I have lived in Mexico, all right? I'm Mexican, just so you know, all right? So I have a stronger, well,
Cojones.
now then, love it, bro. There you go. That was a stronger
heard it here
sense
first.
of Mexican culture. What were you saying? Sorry.
You heard it here first. He's got the strongest cojones.
Love it, man. Oh, bro. Hilarious. So my perspective is usually United States people, especially in then we talked about South, what will be East and Northeast U.S. They tend to move out more. And that is all right. Do I have a little bit more money? Am I doing better? What I mean, maybe I want a house with an extra bedroom, a house with this and that, right? Maybe I can sell my house or get a credit, buy the new house, sell my house, pay out a credit, and only pay the interest on or based on the credit that I used, basically mitigating having a much cheaper, credit of that initially I signed up for, right? So basically, you move out, you get a better house, pay the difference, and when you sell your own home, and then basically you just enjoy a new house for a small increment fee, if that makes sense, right? So kind of like a subscription upgrade. And then usually I do see that you guys like either move from next door states, as long as the party in charge is kind of like the same. I don't know, that's what I've noticed. Please let me know if that is not the case. And also if the rules of the states are not like, for example, between California and Texas, right? I mean, I think that will be not such a compatible moving state one to another. But having said that, here in Mexico, since our build-ups are either generational, they're also, everything is made of center block. Everything. Like the thing that you use with your basements, everything is like that. Like top to bottom. Yeah, so do you want to put a nail? I mean, do you know what is the benefit? It's gonna hurt, but you can put a nail, whatever. You don't need to find a stud, man. That's fantastic. But yeah, also, that means remodeling the thing costs more, but the cost of manufacturing or what services are cheaper here. So we tend not to move out of homes that easily, but build them like Legos, if that makes sense. So when we build, we always project a bigger house, right? Having said that, what happens with maybe the strong Mexican culture living in the States, right? What happens with just United States that have been there forever and they just don't plan to move out, right? Maybe they just increase their homes. What happens when they have a little bit more of extra money? What do? They go either renovate or invest, right? So that's why just the April existing home sales could change into a positive or negative as a hedge or not. My perspective, that is not how I will be looking at it, only if you look at it in conjunction with PMI. All right, so let's go here and let's read this very quickly. I promise it's not going to take forever. Top U.S. economy date for crypto markets this week. Guys, just remove this week and apply it for every month or however it releases. All right, so crude oil. Why? Because that is basically transportation. How economy is moving one thing from another, right? So if Walmart doesn't buy, it doesn't need to transport anything, right? So basically that tells you whether we're doing great. We're projecting for buyings or more commercial rotation or not, all right? Initial jobless claims. Basically the first time that you ask for you're not having a job and you ask for government support, all right? S&P Global Manufacturer PMI and Yep, PMI. And what was the other one? Dude, what was? Come on. I don't quite remember. Oh man, it just slipped out of my head. Sorry, manufacturer and PMI, but whatever. Those two from here are global service PMI, perfect, and global manufacturer PMI. Sorry, my bad. Yeah, I just need to read them. Existing home sales. This is what we talked about, right? Or from April in New York sales. So those are the most important ones that we're going to be looking at this week, but also look at them throughout the months. Initial jobless claims. It's just basically people that just lost their job and they do not have enough money and they're asking for government support, right? Here is initial jobless claims weekly measures the number of individuals filling up unemployment benefits for the first time. There we go. This indicator reflects labor market health for crypto markets, influencing investors. And here is the important part: investors. Are you an investor, or are you a trader, or are you retail? What part of, or how do you consider yourself? Then go look at where the difference and see where do you fit, right? Sentiment and money policies expectations. So a core, and this is what things, a core labor market indicates, a indicator that could shift market expectation on FED policies. What does that mean? Rising or lowering rates, right? So remember, this is influencing investors. Why? Because the FED or the Fed could be changing the rates on those loans. Why? Because people doesn't have their money to be spent. They basically rise it so you don't get entangled with a debt that you cannot pay then later, right? Trading economy shows a consensus forecast of 232,000 after a previous reading of 229,000. All right, so basically we're increasing. This indicates the economy projects economy weakness. That we're decreasing because we went to 232 to 229. My bad. Economy weakness last week. A sentiment that could boost crypto investors seeking a hedge against uncertainty. We're talking about, again, what? Investors' sentiment based on the Fed policies. All right, so you look at how people are having jobs. And then if they're falling, they're losing jobs, Fed could lower rates or increment rates. And then basically the result of a decreasing economy will boost crypto as a hedge. All right. So conversely, initial jobs claims below the 229 or 229 seen in the last week ending May 17 signify a strong economy. If you're doing great, this is what we look at, where we need to look at the other way around. This pump that we have had, we know now for a fact that it's been retail driven. Who is retail? Retail is you and I that had a job or have a job. All right. So despite investors may not have a good sentiment, and we could be looking at retracement if the initial jobless claims are not that low, that means, or increase very much, that means people, retail, will have money to counteract the dump from investors. All right. So it's not only how if it goes up or if it goes down, it is a matter of how much it goes up and how much it goes down. All right. Small movements will basically stick to whatever this says, which is losing jobs, crypto pumps, earning jobs, crypto dumps. All right. For small numeric differences. Big differences, remember, is huge money allocation, which if I have an extra, $100 right there, I would either spend it with my girl or put it into Bitcoin. Right? At this point, I'll put it into Bitcoin, just so you know. So just remember that difference. It's not always black and white, but at this point, as things are looking like, which is a slight difference, right? Pump and dump. Better numbers of jobs, dumping price of Bitcoin. Worse numbers of jobs, better price of Bitcoin, all right? Pumping price of Bitcoin. Service PMI, released monthly by S&P Global. I don't like that S&P Global is the only one releasing this, but they invented it, and this is something that we trust, all right? So, PMI gauge activity in the U.S. services sector. The U.S. economy indicates covers areas like transport, which remember at the very beginning we said that's why we're looking at oil prices. All right, so transport, finance, and hospitality. All right, for crypto markets, the services PMI influence risk sentiment and USD dynamics. A reading above 50 indicates expansion, while a reading below 50 signifies contraction. All right, here's what things they're getting now. Or guys, I need 1 second. All right, sorry, something important came out. I'm gonna be dropping my screen
No
for a
problem.
second. Could you take over? Thank
Yeah,
you.
absolutely.
Be right back in 2 minutes, guys. So sorry about this.
All good. Where do I read info on the indicators to use for what? And what are the recommended settings for each indicator? At the start of the morning, how to quickly identify what is worth trading for that day, week, month. The screener indicator has only about 20 configuration symbols. Okay, green. So for me, I always suggest when you're looking for specific, well, where do you get the info to read these indicators? I always suggest you pick 3 to 4. Okay, for me, I like order blocks, liquidity zones, VWAP. Okay, that would be on my dynamics. So you have order blocks up top here. You have VWAP in here, show VWAP, and then liquidity zones down in here, liquidity zones. I think Daga shared, yeah, where do I read on that? So that's where you can read on that. Also, we do have a Chart Prime documents section if you do want more information on that. You can look at this right here. I'm going to share the link with you in the chat so that you have access to that as well. Okay. On order blocks and stuff like that as well. Okay. And what are the recommended settings for each indicator? So it's going to be specific to how you trade, right? So a tool is a tool is a tool. It's always there to assist you, right? It's there to help you. And these tools are something I use every single day. But we're going to be able to flip these on. The order blocks, in my opinion, are some of the strongest things. But you need to understand how the tool works. That's why I sent you the document. So an order block is basically, if we're doing a quick summary of what an order block is, to me, an order block is there's a big ass whale here. Okay, here's your big ass whale. This is as simple as I can put it. And this guy here, he's shorted the market here. Okay, with $5 billion, but only when we pushed up here, only $2 billion got filled in his trade. So he still got $3 billion to get into this trade. So an order block is like a magnet. These things are going to come up. They're going to fill up Mr. Whale, his bag of his short, only then to send price in the opposite direction. Okay. And that's how I think of them. I think of them as an area in which, big money's trying to fill up an order. It hasn't fully been filled yet, so price returns to it and then sends it in the opposite direction, just like the one in here. These guys came in here. There was an order filled maybe from the longs in here. They came back down, filled the rest of the bag, sent price in the opposite direction. Okay, something I use quite frequently. VWAP, okay, is volume weighted average price. It's an intraday trading thing, meaning it resets every single day. That's going to populate on your screen here. It's going to be that white line you can see in here, and it acts as an average price for your day. You can see it acts as support and resistance. It trends, okay? And it's a very useful tool throughout the day. I really enjoy VWAP. I typically trade a lot off of VWAP. You can see we're coming into a little order block right now. We could get a little bit of resistance. I have a level higher here, which is the top of this order block in a golden pocket. So gonna always try to build confluence with our indicators, then I highly suggest you get good with your oscillator, understanding when you're overbought, oversold, what a divergence does. Okay, that's really going to help you maximize your tools here, when to buy, when to sell, when you're oversold or overbought. Okay, your money flow, when's the money coming in and when the money's coming out, it's going to allow you to make trades based on all of that. That's going to be very critical to success. Okay. Then you can flip through trending tools. Okay, so for me, I like a dynamic reactor, quantum reactor. Those are very useful for when we're trending. You can see here in a range, not as effective as when we're trending. You can see when we're moving on a trend, anytime you come back to that reactor, you can look at as a good buy, okay, for a continuation out. So a lot of tools here. We don't want to flip them all on at one time. We want to pick and choose, mark out our charts accordingly, and make decisions based off of confluence within those areas, key areas, which is going to allow us to take higher probability trade setups, right? So it's going to allow us to take these trades, and it's going to increase our win rate. And that's what we want to do, is we want to have a higher win rate. And with a big R multiple, meaning a 3-to-1 risk to reward ratio, that's going to allow us to make money over time, okay? Typically how we want to treat trading. Okay? So you're gonna start with a few and then add layers and layers and layers, and as you get more comfortable with more things, you're gonna build more confidence, right? For me, I have boxes for multiple confluences. Okay, I have, golden pockets, I have 7, 8, 6s, I have order blocks, I have liquidity, right? And I mark them out myself. Buy and sell levels. That's when I have 2 or more confluences in one each in each area, and that just allows me to flip it on and off and keep my charts relatively clean, right? It's it's not easy to trade when you have all this stuff on your chart. Okay, so you definitely want to do that. Another thing I do highly suggest is you learn how to trade a range. A range is your best friend. Okay, buy low, sell high. And a tool that I always use and recommend is your predictive ranges. Okay, so your predictive ranges with premium and discount zones is going to be something that I use as well in your liquidity analysis. Okay, and that's going to help you identify those areas. Okay, so you're going to be able to add a lot of confluence with our tools here, and that's going to allow you to be obviously more profitable in the long term. Nothing in trading is perfect. What we can do perfectly is manage our risk and manage our position size, risking 1% per trade, taking high probability trade setups, right? Looking for confluence, marking out key areas. Trading a system, right, is what we want to get good at, right? And implementing that system along the way is the hard part, the discipline, the patience, waiting for. I didn't take a trade all morning. Like if we review my morning, I was looking for a long, but I was not buying this shit right here because I wanted an SFP of the low. Okay. However, breaking this high could have gotten me long in reflection. Okay. It's always good to reflect, but for me, I had a key area down below in here. We didn't take it. I was looking for the sweep in here. We didn't take any of it. So for me, I was looking for a sweep and a bounce. Didn't get it. Then we started to take off. I longed here and I got out here for $200. Okay. That's right here. I can share that with you guys so that you guys know that we're always trading. I mean, I trade live every single day. I don't really have to justify it to you guys, but you guys can come and watch if you want to learn something and how I trade the markets every single day. However, a nice push up and continuation. To me, this is shit. I do not want to trade this right now. If anything, I'm looking for a short, but I'm waiting for confirmation because it's up only. And all this says to me right now is that we're going to dump at some point. FOMO is being created and liquidity will be taken. That's how I look at this right here. So I don't get involved until I see a confirmation. I can go short here, or I see a retracement back down to an order block in here, and I can get long off of a higher low. Okay, so for me, a lot of trading is waiting for your setup to kind of show itself, right? We have fair value gaps, we have order blocks all the way up, right? It's not something I'm really interested in. So I wait, right? Double bottom, bounce, cool, I didn't get it. Whatever. On to the next one. My next trap is up here, right? I can look in here and I can be like, okay, once we get structure in here, I can look for a return to the previous highs, right? I can look in here for a potential buy. And I can start building out my long plan if we return back down into this area here. I'm not buying the top. Okay, I want to be patient and I want to plan my next trap, right? And by doing that, I give myself a little bit of a chance to have a higher probability of winning my trade. Okay. And that's how I'm typically doing it. So I'm just planning right now, right? If I get the right conditions, if it comes up into my area and it, double tops or for me, I would look for a reversal right now, which means a mitigation of a low and then a continuation down. Okay, so I need to see that change in character, typically on like a higher term time frame, where I can justify getting short. Right now, this is overextended, so I'm looking for some sort of return and some sort of continuation back up to come get the liquidity up at the highs, but that doesn't mean it necessarily has to happen. Right now, we're at the top of the range. This is the bottom of my range. Right, so I'm looking for shorts. I'm looking for longs. Okay, I didn't get my criteria to enter long down here. It took off. It ran away from me. I'm not chasing the price. Okay, always setting yourself up for success. The hardest thing with trading is not trading when you're bored. That's it. Because you'll be bored sitting here and you're like, what the hell is going on, right? So you'll jump into a trade and then you'll lose the trade, or you shouldn't have jumped in. There's no reason, right? So making sure you're really checking yourself before you start to put on risk, right? Because every time you enter a trade, you are putting on risk and therefore putting yourself at a position to lose money. And what's the best winning strategy is not losing money. So that's what we always want to look at. So looking at this, we are in a range, right? We are at the top of the range, a little bit overextended. If we're looking for a retracement, I would look for previous highs. I would also look at point of control in here as a bounce level and look for continuation. For now, it's a bit of a waiting game, okay? I'm looking for retracement and continuation, meaning that, we mark out our key levels. We can look here and we can look down here, right? So if this, then that. Just wanting to wait. Now, if we do put in topping structure, right? If we start to put in, double tops, mitigation of lows, we can look for a retest and look to get short. Because we want to favor shorts up here. We want to favor longs down here, right? If you just did that here, right? You got your range was established here, right? You're short, you're going to long, you're going to short, you're going to long, you're going to short, you're going to, well, we caught this long. And you're going to short and you're going to long, right? So there's lots of trades to have in here, but it's that idea that's going to pay you. And when you trade a range like that, the best part about it is that you're wrong once, really. Because if you're in a range, right, and your range is going, and then it takes off, you're wrong then, right? You're wrong when you go short again, you get stopped out here. So that's why you must use good risk management. Okay? You're always going to be wrong at least once. Or you're getting in too early, right? Triple top, right? Sweep of the highs, retest, short, okay? Double bottom, double bottom, double bottom, double bottom continuation over the weekend. I took this long, right? Nice breakout, retest, continuation. And you'll learn how to navigate these even more with us, right? And as we continue to work with you guys and teach you guys, you'll start to see it yourself, and you'll start to take trades, hopefully without us, and hopefully successfully. That's what we want. But like OC said, we got a double bottom, hopefully followed by a bull pennant, and then we can look for a continuation trade there. But we wait for this. We need this to form, right? We need some sort of retracement and continuation into key areas. And by doing that, we We give ourselves a higher chance of not only winning the trade, but managing our risk. If I'm going long right here, where the hell am I putting my stop loss? You know what I mean? Like I'm buying the top, baby. So like unless I'm going like tight to the candle here, I want to get long and I want to put my stop under a significant low, right? I want to get long and put my stop underneath where it's protected. Protected, right? Protection is, you got to use protection, man, unless you want to have negative babies in your trading account, okay? Meaning you're going to lose money. So you must be safe, not sorry. And that's my juice for all of you guys. You all right, OC? Everything okay?
Everything okay? Sorry for that taking that long. It's just, it was the cops again. I thought you had to do with the joke from the paper thing, but no. They just want me to do an investigation. I have cameras all across my property, so they're following a guy that seems like it's been mugging, not mugging, but trying to enter around some properties. Yeah, man, but I just not liking cops coming now to my home. It's not something that I want. But yeah, and since I have direct view right here from the outside, they actually could see me, so I could not, like pretend I was deaf. Sorry about that. And Alex, thank you so much for covering up. You basically took the full thing. Let me share very quick the link that I was going over. We're running out of time, but here is the link. I advise you guys to take a look at it. Oh yeah, I shared it before, but go ahead, read it, save it, or at least copy and paste it into ChatGPT, all right? And then ask it to make a chart based on what you're looking for, the upcoming numbers. That will give you basically just a check mark, right? Check mark. PMI, positive, negative, crypto up and down. And then you use check mark, check mark, check mark. And at the end of the data, you'll see whether you have more bullish or more bearish sentiment in the micro market. Therefore, you could be positioning your investment for the midterm scenario. Other than that, guys, thank you so much for joining. Alex, want to say the goodbyes?
Yeah, guys, have a safe trading day. Look for that retracement, okay? Be patient. Like I said, the hardest thing is not trading when you're bored. It's like you're bored, you see something, you're like, oh, it could work. Right? And then you're fucked. You know what I mean? So don't do that.
Yeah.
Be safe, and we'll see you guys tomorrow, okay?
Absolutely. Guys, thank you so much for joining. And as always, see you guys tomorrow.